And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Sonali Basak. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast. Carol Massar and Tim Stenovec joining us right now as we welcome our audiences across all of our Bloomberg platforms as earnings season really gets into full swing. Quite a few set to cross after the bell tonight, including Enphase, including
Tesla.
Chubb, including Steel Dynamics,
These are not
including
names
Mattel,
Tesla.
including Visa,
Including
and oh,
Tesla.
right, I forgot that one, Tesla.
Who's your favorite child, Romaine?
Tesla. Stock is up 1.8% as we say. It's off its highs of the session, but we saw a rally in Tesla shares today. And speaking of rallies, guys, the S&P 500 now up 2% in the past 2 days. So different tone.
So we're awaiting Tesla. We spoke to Nancy Tangler over at Laffer Tangler Investment. She was just in our studio, and she said, we think a lot of the bad news is already priced into Tesla, and they could actually be adding to their position. They added at $180 a share, right now at $144 a share. So she acknowledged that she got in a little early.
Well, it's interesting, too. You have a lot of analysts that are still having price targets that are way higher, above 220 or so. So, of course, there is some buying appetite out there. The question is what gets it there?
Yeah, I mean, what gets it there here? I mean, let's walk you through the numbers here because we're looking at analyst estimates right now of adjusted EPS of about 52 cents a share. That's a massive drop year over year. And even on a revenue basis here, we're looking at something around $22.3 billion, if you believe analyst estimates. That would be a 4% decline here. And it's been quite some time. I have to go back and look since we had a quarterly decline in revenue over at Tesla. Let's get you the closing bell numbers ahead of the earnings here. Green across the screen for the major indices on this Tuesday afternoon. It takes a while for these numbers to settle, but you see it there on your screen. The Dow Jones Industrial Average up more than 260 points, or about 0.7%. The S&P higher by roughly 60 points, or 1.2%. The Nasdaq Composite going to close out the day higher by more than 200 points, or about 1.6%. And look at this. Cyclicals and small caps getting in on the party. In fact, that was your outperformer on the day. The Russell 2000 higher by 1.8%.
Yeah, and taking a look at the S&P 500, most of the names in the index actually higher today, Sonali. About 388 names posting gains in today's session. And you've got about 111 to the downside, 4 unchanged.
It's interesting. You looked at sectors, still broad-based gains across those sectors here. Communication services, information technology leading the way, though you did have a strong bid in industrials and consumer stocks as well. Healthcare also up more than 1% on the day. Materials really your only loser on the day today, guys.
All right, real quickly, guys, as we await those earnings to cross, Tesla shares, as I mentioned, up 1.8% in today's session ahead of their earnings, still down more than 40% year to date. So sentiment obviously very negative here in 2024. Globe Life, ticker GL, number one gainer in the S&P 500.
What?
I know, an insurance company raising its operating earnings per share forecast for the full year, and the gain extending a bit of a rebound from a record drop earlier this month in this name following that short seller report. So number one gainer. Do we want to do some earnings here?
Texas Instruments crossing the wire right now. Is that what you're looking at?
That's what I'm looking at.
All right, well, let's do it here. Revenue coming in the first quarter at roughly about $3.66 billion. We'll round it up to 3.7. That would be a beat over street estimates of 3.6. EPS coming in at $1.20. That's versus $1.85 in the prior year here. So a bit of a drop there, though it does look like it came in above estimates. Here's your forecast going forward. 2Q revenue, the company guiding $3.65 billion to $3.95 billion. The street was looking for 3.8. Here's your guidance on EPS. $1.05 to $1.25 was what Texas Instruments is guiding for. The street was looking for $1.17.
Not getting a ton of commentary, at least in the press release at this point. Just going over the numbers, revenue decreased 16% from the same quarter a year ago, 10% sequentially. Revenue declined across all end markets. This according to the company's president and CEO. Also saying that the second quarter outlook is for revenue in the range of $3.65 billion to $3.95 billion. Earnings per share between $1.05 and $1.25.
Now, I also want to bring you some news over from Goldman Sachs. Goldman did hit the first record high since 2021 here. The shares have risen 1.6% here. And you have some interesting movements there on a day that you really have no interesting news, frankly. Yields are on the decline again, so maybe that's pretty good for markets.
Maybe says something to sentiment, like overall, right, that we've seen certainly over the last couple of days. Just watching, though, Romaine, shares of Texas Instruments on that outlook. That stock now up about about 5.8% here. So investors moving it, as we said, sees a second quarter revenue $3.65 billion to $3.95 billion. The estimate on the street is $3.78 billion. So investors definitely driving this one, although we're bouncing around a little bit, but still, for the most part, much higher here in the aftermarket for a stock that hasn't done much this year, down about 3%.
Yeah, absolutely here. But of course, a lot of people look to this, not quite in the zeitgeist when it comes to AI and chips overall, but it does give us a little bit of a peek here into one corner of that market, particularly because we're going to have to wait, I think, like another month before we get NVIDIA.
Yeah, exactly, right. And that's going to be a big one, right? That AI bet. Tesla shares, guys, just starting to cross the Bloomberg terminal, Romaine.
All right, let's get you those numbers right now. Tesla crossing the wire. And let's go right to it here. The company coming in, EPS coming in at 45 cents a share. The street was looking for 52 cents a share, so a bit of a miss there. And remember, that bar was lowered significantly here. We have to look a little bit deeper into some of the numbers. There's some of the commentary coming out right away. The company's saying that it's updated our future vehicle lineup. They're also saying that they still see notably lower volume growth rate for 2024, but it does plan to accelerate the launch of new models going forward. Now, I should point out, we had a chance to catch up a little bit earlier with a couple of analysts, and they were talking about just this here, that yes, this quarter was going to be bad, but what they really wanted to hear, guys, was what is the pivot? What is the identity? Are we going to see a ramp up in production? And more importantly, in which vehicles?
Yeah, so let's, again, seeing the stock up about 6% in the aftermarket. We know sentiment has been really low. So again, first quarter adjusted EPS, guys, 45 cents a share. That is light. The street was looking for 52 cents. First quarter revenue, also light, $21.3 billion versus an estimate of $22.3. But again, looking to accelerate the launch of more affordable models. That's going to be key because that's been a pivot, or at least a tone, it felt a pivot in tone, if you will, from Elon Musk, that maybe it was backing off of a more affordable Tesla model, which would reach, as you know, Romaine, a much more wider audience.
And wasn't this the big issue, right? Because when that report, I think it was Reuters, was one of the first to kind of report that Elon Musk was backing off of that, and then he came out on X and said, no, that's not true. But he's still got to articulate a strategy because we've seen the results here, not just in Tesla's numbers, but when you look at the competition from some of those lower cost or lower price Chinese models and even some of the lower price U.S. models here, we see where a lot of that market share is going.
Well, I'm going through the deck right now for the 2023 update, the quarterly update deck right here. And it's 31 pages. The company's saying that they experienced numerous challenges in the first quarter. They cite the Red Sea conflict, the arson attack at the Gigafactory, the gradual ramp of the updated Model 3 in Fremont. Their COGS per unit, though, declined sequentially, driven primarily by lower raw material costs. The company also saying, talking about the autonomous and electric future. It's saying that we believe scaled autonomy is only possible with data from millions of vehicles and an immense AI training cluster. We have and continue to expand both to make full self-driving supervised more accessible. We reduce the price of subscription to $99 a month and the purchase price to $8,000 in the U.S.
It's interesting. When you look, you do have them missing estimates, as Carol was saying, not just on revenue, but vehicles sold as well. But investors, if you take a look at the stock so far, shaking off the numbers themselves and looking at that update, the update also walks you through a lot of the sequential declines in volumes due to a lot of the issues around the world, shipping diversions caused by the Red Sea conflict. And to your point, really guiding investors to the future here towards artificial intelligence and also the deployment in capital that they're willing to put forward.
And this is what Tesla does, and they do it great, basically trying to guide towards that future. But I do want to just focus real quickly on the here and now, because when you go through some of these numbers in that most recent quarter, they were awful, and they were actually a lot worse than what some folks talked about. We talk about Model 3 production at that Fremont factory, down sequentially as they changed up the lineup. They talk about the production at that Gigafactory in Shanghai, down sequentially once again, although they do expect demand to improve later in the year. Model Y production in that Berlin factory, down sequentially here. Well, you get the picture here. So the question isn't so much longer term, do they make that up? The question is, how long term is that going to be, Carol?
Well, it's always timing, right? How long it takes. And I'm looking through the deck, too. In 2024, Tesla says our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle and other products. In 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business, which is something we were talking to Nancy Tengler about. Was it the battery? But the battery business and the importance of that actually to the Tesla story that doesn't necessarily get a lot of attention mentioned. Hey, one other metric, first quarter gross margin, 17.4%. The estimate was 16.5%. So that's coming in better than the street forecast.
Page 10 on this presentation, I think that this is a bit of the money area that a lot of investors will be looking at here. This idea of the lineup for the new models accelerated ahead of the previously communicated start of production in the second half of 2025. These are the new vehicles, more affordable models that they're looking to bring to market faster. And they do talk a little about the robotaxi here, continuing to pursue a revolutionary unbox manufacturing strategy. So that is the outlook. That is page 10, right before you get to the market share here. But it does come right after they lay out all those challenges ahead.
Isn't this important? If they're committing, it feels like a fair amount of time and like making a point to talk about the launch of more affordable models. As we talked about Romaine earlier, the reports, the back and forth of like, are they not going to do this? This is so important to the story going forward.
Yeah, absolutely, Carol.
All right, guys, we got to wrap. I know you guys just got more on your side, but we are seeing shares of Tesla definitely rallying in the aftermarket. All right, that's across platform, radio, TV, YouTube, Bloomberg Originals, breaking down, of course, those Tesla earnings. We will see you again, same time, same place tomorrow.